I would not be surprised, Kai, to see price of gold in dollars dip below 2000 again. Why? Because the establishment of bullion banks, which are short in Comex, and I guess are pretty short on an uncovered basis in terms of their overall liabilities in London, want to get it down in order for their year-end valuations to not look as bad as they might otherwise look. Get rid of credit, get into gold, say thank you for the opportunity. And it's interesting, what has been driving demand for gold has been, I mean, you could actually say it's liquidation of credit by central banks. They're getting out of each other's currencies. They're getting into gold. They're getting into gold because gold is real legal money.
In a recent interview, Alasdair Macleod, head of research for Goldmoney and SchiffGold, shared insights into the factors influencing the gold market, predicting a potential dip below $2,000 in gold prices. A key driver behind this projection is the reported short positions of bullion banks in the Comex and their substantial liabilities in London. Highlighting recent market movements, Macleod noted a modest rally in gold markets during the Tuesday trading session. This comes after a significant breakthrough on December 4th, where gold prices breached a crucial threshold. However, Macleod urges caution, indicating that prevailing market conditions, influenced by the strategies of bullion banks, may lead to further fluctuations. Macleod emphasizes the role of central banks in shaping gold demand. According to him, central banks are increasingly liquidating credit positions and redirecting their focus towards gold. He argues that gold, historically regarded as real money since Roman times, is regaining prominence as central banks globally pivot away from reliance on credit. A noteworthy trend is the reduced emphasis on the US dollar in global central bank reserves. IMF data reveals a decline in the dollar's share in central bank reserves, while holdings of the Japanese yen have risen. Macleod suggests that this shift underscores the changing dynamics in the global financial landscape. Macleod extends his analysis to global perspectives, highlighting the recognition of gold as money in both Western history and Chinese culture. China's consistent increase in gold holdings over the past 12 months aligns with a broader trend of global central banks actively supporting bullion prices. Interestingly, a behavior change is observed among young Chinese individuals now participating in the gold market, encouraged by discussions on social media platforms to accumulate gold, even in smaller denominations. Let's delve into key moments from Alasdair Macleod's interview with these video clips.
You have to understand it's not gold going up, it's the dollar going down, or the euro, or the yen, or whatever your currency is. They're all going down. We're talking about credit, which depends entirely on the faith in that credit's purchasing power. And that is a problem. And you can see we've discussed the foreign position in US dollars and all the rest of it. And we can see, how that could actually deteriorate into something even worse. Now, that being the case, and assuming that the price of, or the value rather, of gold moves sideways, then under those circumstances, the dollar price of gold will go up. Of course it will. In the very short term, the reason I think you're not seeing any sort of excitement or follow through or whatever is because markets are just very, very quiet. You've got these conditions in which equity markets are going up. You've got a few people sort of maybe getting into bonds before the prices rise even more. Ha ha. These markets, they don't actually reflect any sort of reality. I would not be surprised, Kai, to see the price of gold in dollars dip below 2000 again. Why? Because the establishment of bullion banks, which are short in Comex, and I guess are pretty short on an uncovered basis in terms of their overall liabilities in London, want to get it down in order for their year-end valuations to not look as bad as they might otherwise look. So I wouldn't rule out in these very quiet conditions. I mean, if I was a bullion bank, I'd be going around to Christmas drinks with my mates in the other banks and saying, when are we going to hit this price? How much can you do? I reckon I could probably do, 10,000 contracts. What are you, Charlie? What do you reckon? Come on, have another beer. Come on, tell us. That's what happens. Yeah. So don't rule out another smash in the dying days. But if that happens, I mean, it's so against what is actually going on in terms of the value of credit. Get rid of credit, get into gold to say thank you for the opportunity. And it's interesting, what has been driving demand for gold has been, I mean, you could actually say it's liquidation of credit by central banks. They're getting out of each other's currencies. They're getting into gold. They're getting into gold because gold is real legal money, always has been since Roman times, going back to the 12 tables of 553 BC, would you believe? No, 549 BC to be accurate. Refined and refined and refined until Justinian's Pandects. That was 553 AD, and the Basilica, about, I don't know, 400 years later, and so on. And of course, the successors to the Eastern and Western Roman empires were all us Europeans, and we explored the world. We went out and colonized the world, and we took our laws with us. And the Chinese, even though we didn't colonize them, we sort of maybe had a bit of influence with trade and so on. They came to exactly the same conclusion independently of us, that gold is money. And someone told me, and I can't verify this, that the Chinese for gold is the same as the Chinese for money, presumably in Mandarin rather than Cantonese. But anyway, so, the world understands that money is gold and all the rest is credit. But in the West, we've forgotten it. We've been subjected to propaganda that gold is now a pet rock and the dollar is money. It's not. The dollar is a liability of the Fed.
In a significant financial development, Russia's gold reserves have reached an unprecedented $151.9 billion as of November 2023, marking a notable 2.2% increase, equivalent to an additional $3.198 billion compared to the previous month. The latest figures from the Bank of Russia highlight the country's commitment to bolstering its gold holdings. Renowned analyst Macleod speculates that Russia's growing gold reserves may indicate a strategic move to position gold at the forefront of international currency transactions, challenging the established dominance of the US dollar. This speculation gains weight as Russia is set to preside over BRICS in 2024. According to official sources, one of Russia's key priorities during its BRICS chairmanship will be expanding the circle of BRICS friends, focusing on engaging countries in Latin America. Additionally, there will be efforts to increase transactions conducted in national currencies. Analysts interpret the BRICS initiative to create a reserve currency as a potential challenge to the supremacy of the US dollar and the International Monetary Fund's special drawing rights. Macleod further anticipates that, with Russia assuming the presidency of BRICS, there might be a concerted push for the inclusion of gold in global transactions. Let's get back to the interview.
Sergei Glaziev, is keen on putting the ruble back onto a gold standard. He's argued this in press articles in Russia and so on. So we know that, and we know he's the architect of what was proposed to be the Eurasian Economic Union trade settlement currency, which was going to be, I mean, it started off being a sort of basket of this, that, and the other thing, but it was moving towards, having gold rather than something that needs to be, refixed, rebalanced, whatever. It was also becoming clear that this was, if you like, a Trojan horse for a wider project, perhaps throughout the Shanghai Cooperation Organization and possibly for BRICS as well. So that was the way in which the thinking was going. Now, I've had a further thought on this, and I think that, let me backtrack just a little bit. When you, let us say, sell Turkish lira to buy, let's say, Russian rubles, something like that. No, that's a bad example. Chinese yuan. The way in which the foreign exchanges work is you sell your Turkish lira for dollars. Yeah. So you buy dollars, sell lira, buy dollars. You then sell dollars, buy yuan. So the dollar is always in the middle of the transaction. I think what Russia was going to do, this is, subsequently thinking about it and waking up in the middle of the night and sort of thinking, this is, I think what Russia wants to do is to put gold in the middle of the transactions. And I think that the statements that are coming out of various interests, if you like, BRICS, whatever, very much is, look, deal in your own currencies, settle in your own currencies. And I think that by having gold in the middle, that would facilitate that process, if you like. it would also very, very quickly do away with the need for dollars. 60% of the world's population, if we look at, Asia plus BRICS and so on and so forth. So I think that's something I'd like to add in. It may not, I may be wrong, but it seems to me that that's actually quite a likely starting point. And bearing in mind that Russia takes on the presidency of BRICS on January the 1st, I would expect their desires to get gold involved to go back to the top of the agenda. So that is interesting. But what I'm saying is that, if you're, let's say, not dealing nation to nation, if you are an exporter and an importer, and you just got to, pay the usual bills, and you've got a currency problem, what am I going to do with the currency? Then, the bridge between one currency and another is always the dollar. Governments can come to an agreement between themselves, which is undoubtedly what Russia and China have done. So I think this is probably what this is about, and that will be an initial stage.
Okay.
The other aspect of this, which is very interesting, is Argentina.
With Macleod's speculation on Russia aiming to place gold at the center of global currency transactions, what potential consequences could this have for the traditional dominance of the US dollar and other reserve currencies? Given the anticipated push for the inclusion of gold in global transactions, how might this proposed shift in the international monetary landscape impact investment strategies, currency valuations, and the broader global economic order? Share your thoughts in the comment section. If you liked the video, please subscribe to our channel and remember to activate notifications by hitting the bell icon. Your participation means a lot to us. Thank you.